Indonesia's economy enters a new phase under President Prabowo Subianto, inaugurated late 2024. The country has been growing steadily, around 5% in recent years, with low inflation and moderate unemployment. However, there have been concerns surrounding Prabowo Subianto rule as of late. For instance, many Indonesians have been calling out his administration for losing investor confidence and experiencing market volatility. Since President Prabowo took office, Indonesian financial markets have experienced notable turbulence. The Jakarta Composite Index has declined by over 10%, and the rupiah has weakened by 7% against the US dollar, reaching levels not seen since the 1997-98 Asian financial crisis. These fluctuations reflect investor apprehension regarding the administration's economic policies, particularly concerns over fiscal discipline and the potential for increased government intervention in the economy. One government intervention example is the likes of President Prabowo's flagship initiative, the Free Nutritious Meal Program, which aims to combat child malnutrition by providing free meals to nearly 90 million children and pregnant women. While noble in intent, the program's estimated annual cost of $28 billion has raised concerns about fiscal sustainability. To fund this initiative, the government has implemented significant budget reallocations, leading to cuts in other critical sectors. For instance, higher education funding has been reduced by 39%, prompting widespread student protests under the Dark Indonesia movement. Secondly, Indonesia's economic growth has shown signs of deceleration. In the first quarter of 2025, the economy expanded by just 4.87% year-on-year, marking the slowest pace since 2022. This slowdown is attributed to various factors, including reduced consumer spending, global economic uncertainties, and the impact of domestic policy decisions. The government's ambitious target of achieving 8% annual growth by 2029 appears increasingly challenging under these conditions. Then, thirdly, a concern that many people see is Prabowo Subianto's appointment of individuals with military backgrounds to key positions within the Finance Ministry's revenue-generating directorates. These have sparked concerns about the erosion of meritocracy and the potential for cronyism. Such moves may undermine the effectiveness of these institutions and deter foreign investment, as transparency and good governance are critical factors for investor confidence. So, is Prabowo Subianto's economic policies all wrong? Well, let's discuss these in more detail, starting with growth targets and investments. Prabowo campaigned on an ambitious plan to boost growth to 8% by 2029. To reach this, his administration published an investment roadmap requiring roughly 47,573 billion Indonesian rupiah, 3 trillion, from 2025 to 2029. Remarkably, about 87% of that, $3 trillion, must come from the private sector, with the government and state-owned enterprises, SOEs, expected to contribute only approximately 13%. To mobilize this, Prabowo launched a new sovereign wealth fund, Danantara Indonesia, to pool all SOE shares, eventually over $900 billion in assets, and reinvest dividends into growth projects. Danantara's first $20 billion wave will target resource processing, AI, and energy-food security sectors. In theory, this could channel capital into industrialization. In practice, markets reacted nervously. When Danantara's dream team, including ex-presidents and advisors like Jeffrey Sachs, was announced in March 2025, stock markets briefly plunged. The main index fell approximately 7% amid fears of fiscal overreach. The government responded by emphasizing fiscal discipline, keeping the budget deficit under 3% of GDP, and promising professional management for Danantara. Analysts caution that sustaining 8% growth is extremely challenging. Indonesia's economy was approximately 5%, and market consensus now sees approximately 5 to 5.2% growth for 2025, and will require continued investment in productivity and jobs. Nevertheless, Indonesia has strong structural advantages. It has a large young population, fourth largest in the world, half under 30, and abundant natural resources. Atlantic Council analysts note Indonesia could become the world's sixth largest economy by 2026 if it harnesses its demographics. Converting the demographic dividend will require investments in education, green and digital infrastructure, and better labor policies. For example, youth unemployment runs at 13%, and female labor force participation only approximately 50%. Effective investment could help create the quality jobs needed. Beyond targets and investments, there's also fiscal policy to take into consideration. Prabowo's team faces a balancing act. On the one hand, it has maintained prudent fiscal guardrails. Credit agencies, Fitch, S&P, Moody's, continue to rate Indonesia at investment grade with stable outlooks, noting healthy growth and moderate debt levels. On the other hand, the administration is introducing costly new programs. The flagship Nutritious School Meals initiative, providing free meals to 83 million children and pregnant women, is budgeted at about $28 billion. Rating agencies and investors have warned that this could strain public finances. Even as the government argues, it is vital human capital spending. To fund everything, Prabowo promises to raise the government's revenue to GDP ratio sharply, from approximately 12% now toward 23%, using technology and better collection, without broadly hiking tax rates. He has floated an IRS-style tax agency and even a possible corporate tax cut, from 22% to 20%, depending on revenue effects. It is unclear how these measures will work out. Success will hinge on reducing loopholes and broadening the tax base. The previous government had set a modest VAT increase, from 11% to 12% in 2025, and Prabowo has not yet confirmed if it will proceed. Meanwhile, the budget has shifted priorities. In early 2025, the administration cut the infrastructure budget significantly, even though Jokowi's government had accelerated road and dam projects in late 2024. Instead, funds are flowing to consumption-boosting subsidies, e.g. electricity discounts, and social programs. The Treasury plans to meet big spending by retaining a tight deficit, approximately 3% of GDP, and by relying more on private investment via Danantara and other PPPs. This dovetails with plans to ease long-term interest rates. BI has cut the policy rate to spur growth in a low-inflation environment. Overall, the deficit for 2025 is kept in check, but agencies note that staying within the fiscal limit will be crucial for investor confidence. Economists and analysts offer a mix of cautious optimism and skepticism. Many agree that Prabowo's policies will largely continue Jokowi-era priorities, infrastructure, investment, while adding his own twists, focus on self-sufficiency, social programs. For example, the Institute of International Finance noted that Indonesia's credit rating was affirmed amid promising growth, but with a caveat that raising revenues is critical. IMF staff in 2024 praised Indonesia's prudent frameworks and strong growth, but urged reforms to raise potential output. Fitch Ratings similarly expects policy continuity under Prabowo, noting a stable outlook. On the investment side, foreign funds initially cheered Prabowo's victory. Markets jumped 1 to 2% on election news, but have since been jittery. The March 2025 market pullback prompted Prabowo's team to directly engage investors. Analysts like those at Bank Danamon stress the importance of clear communication. Indonesia is in a position of strength with solid growth, but poor communication about fiscal plans triggered the slump. Most economists now forecast mid-4% to mid-5% growth for 2025, below the government's 5.2% target, given lingering global headwinds. Looking ahead, experts will watch several factors. Will private investment pick up to meet the ambitious plan? Danantara and deregulation will be tested. Can the government balance social spending and subsidies without losing fiscal control? Ratings, agencies, and investors will watch deficit metrics. How will tariffs and trade wars affect Indonesia's exporters? Negotiations in Washington are ongoing. And of course, will structural reforms in education, business climate, energy, materialize to sustain growth beyond a consumer rebound. In short, Prabowo's economic agenda